Hi, this is Michael Waits recording live from Money 2020 Asia 2025 in Bangkok. Thank you for joining us for this special edition of Insurance for the New Possible, where we discuss the future of finance, technology, and insurance. We are joined today by Ganesh Rengaswamy, the managing partner at Quona Capital. Ganesh, it's so nice to have you on the show. I really appreciate your time today. How are you?
Very good. Thank you so much, Michael. Super excited to be here with you.
I can't wait to have this conversation. Look, it seems really important to Quona Capital that there's no trade-off between returns and impact. This is a really important principle. Why is this so important to Quona, and where does it originate, actually?
That's a great question. It goes back to the genesis of Quona and the purpose and reason why the three of us got together to start Quona.
Tell me.
And we all come from a world of entrepreneurship and venture capital, starting with our experiences in Silicon Valley.
Were you all in Silicon Valley together?
As in the three of us, not together.
But you were there.
We had our own experiences at different points in time. And then we all moved to our respective markets to be able to translate what we have learned in these markets and help drive entrepreneurship.
Got it.
But as we did that, and then the third common thread of that tripod is microfinance, which we all discovered as investors. In my case, very accidentally, I came back to Asia and discovered microfinance very accidentally.
Okay.
And ended up backing companies in microfinance which went public. And there are very few in the world where that's happened.
Yeah.
So it was almost sort of a moment of realization for me that you can do good. And if you can do good at scale and provide commercial success, that actually drives more capital back into impactful ventures.
It makes sense.
So that's the whole thesis of Quona, saying impact for a long time. If you go back to 2000s, was really more a cocktail conversation and people doing nice non-profit things. And in our view, impact is not a side story. It is the main story.
Right.
In India, Philippines, Nigeria, Mexico, Brazil, etc., 60 to 80% of the population is underserved or unserved, and they're mainstream. Now, if you have to solve for them at scale, you need commercial success.
Right.
And for that, you need more and more resources and capital coming into the space. So creating impact and solving for that segment at scale has to be driven by more commercial success, because then that brings back more into the space in terms of resources and talent.
So I want to get back to this in a second, but I want to ask you, what was the genesis of you going to Silicon Valley in the first place? Because one of the things you said about your three partners was, we all went there and learned something different. Did you go there to learn, or did you go there to earn? Like, what was the reason for going there? And then did you cut yourself off and say, I need to take this back home?
It's a great question. And I know we have limited time to answer
No, take
that.
as much time as you want.
But there is an interesting blog someone did on me saying India to Silicon Valley and back.
Right.
And I'll send you the link to that.
Tell me.
But basically, first went to earn and learn. I was in tech as a tech operator. That was my first career, and went to earn and learn, and got really enamored by the enterprise and entrepreneurship in the Valley.
Right.
And how you can really get creative and make transformative changes in different sectors. Right. Having said that, around the global financial crisis, GFC, is when I really had the realization that my learning as an entrepreneur, as an investor, and what I saw in the Valley in terms of having agency, or
Right.
entrepreneurs taking agency, is something needed a lot more back home in markets where you can create solutions that solve a lot more foundational problems that people are dealing with.
Right.
Then, to be honest, some of the things that I was working on in the Valley, which I would say in Maslow's law of hierarchy fall way up there, whether it's through social media or through certain stimulations.
Right.
So there were a lot more real problems to be solved.
Yeah.
So that's kind of how the evolution happened.
Okay.
Over a period of a decade.
But I like this idea of solving foundational problems, right? Because there are plenty of other problems, right, that you can solve, but these foundational problems are going to be the ones with the most impact. Can I make the slightly, I wouldn't say controversial, but slightly interesting case that there's not a lot of impact investing, at least publicly, that you see coming out of Silicon Valley. So how did that transformation happen to you? You mentioned before being introduced to microfinance and thinking, oh, this is different. But how did that all happen?
No, fantastic question. I would say personally for me, a lot of it was around my upbringing, right? And I grew up in a lower middle class family. Obviously, making trade-offs was part of life.
Yeah.
And the experience really taught me that you have to kind of figure out how you graduate yourself in life,
Right.
and how you graduate people around you. So because of that foundation, it was very natural for me to have that always as a part of my subconscious. And then when I visited, in fact, quick side note story. I used to work for a firm called Greylock, which is one of the most respected venture funds in the world, which is the oldest independent venture fund. Came back for a few months sabbatical to Asia, and now it's been 16 years.
Right. So you never went back.
Because I discovered microfinance.
Right.
And it hit me like a bolt because it was making impact while having a sustainable business model.
Right.
And this company is going public really cemented it. So it was really my upbringing, and I was looking for entrepreneurial opportunities to put that to work. Based on the experiences I had in the Valley.
So you had this direct experience which changed the way you looked at investing, right? Because you come out of Silicon Valley and you're thinking, okay, I understand why that works. I come home, oh my gosh, I've never seen this before, but this is also going to work. And once the first company went public, did you see at least a little bit of a sea change in the people that you were trying to convince to raise money from, to help build your funds, where they were like, well, that worked. So maybe we can do impact and make money, have commercial success at the same time?
We saw a tremendous change in two ways, which were diametrically opposite reactions. One was this whole debate on, is this impactful? If it's profitable and it's commercially successful on one side,
okay,
from a certain constituency. On the other side, there was a phenomenal uplift of positivity in the investor constituency,
right,
saying, wow, we have really found a way, hopefully, where you can help scale this up through other different solutions that are impactful, while actually having an economically viable model that can go public. So both reactions were happening at the same time.
Interesting.
And now, of course, it's been 14, 15 years. So maturity is set in how people think about it.
Right.
But yeah, I think we were experiencing both at the same time.
So when I was working at Morgan Stanley and Goldman Sachs, right, I was famous sitting on a trading desk. I was famous for like creating the right process to make what we were doing repeatable, right? Because you can succeed once, nobody really cares. But you want to have this process that makes it repeatable. In the VC space, what kind of processes do you think you've built to make it repeatable? Because, you're not just investing on your gut, right? How do you build that thing so that it's repeatable, where like you can do it, your colleagues can do it, and everybody else can understand it? There's no magic, I get that, but there's still certain things you can do along the way.
Yeah, that's a great question. It's probably almost $1 trillion question for VCs, because part of the fun and challenge is repeatability of success is hard.
Yeah.
Having said that, great question, because there are certain things where process, you have to always follow the process.
Right.
For example, when it comes to how we do diligence, how we get to know companies, how we experience founders, because certain founders can be very charismatic, but you have to do the work to convince yourselves on why something is exciting and not just be carried away by the charisma. At the same time, certain founders may not be able to communicate well because English is not their first language. We invest in 15 emerging countries, but you have to look past that to see why something is exciting. So across the chain process, starting from when you engage from founders to within the team, how you operate, all the way to creating outcomes. I think now we have enough of a depth of sort of body of work.
Right.
And you're absolutely right. I think the repeatability comes by ensuring that you don't give yourselves more credit and take yourselves more seriously than the process.
Right.
Because as a VC, if you have a great success, it's very easy to think that you have Midas touch. It's a business which has huge confirmation bias and lots of false positives.
Yeah, exactly. You don't want to get into a position where you're like, I'm always right, so this is going to be right, even if it feels like it's wrong, because we didn't go through the whole process. You said you invest in 15 different countries?
Yes.
So inclusive fintech, right? It's got to be different in different places. Maybe you can point out some of the differences between Brazil and India, or Brazil and Vietnam, or somewhere. I'm just curious, like, what the differences are.
Yeah, it's a fantastic question. You're absolutely right. It's very different in different markets, including the fact that the GDP per capita can widely vary.
Yeah.
The infrastructure, digital infrastructure, physical infrastructures can widely vary. Consumer adoption of financial services can widely vary.
Right.
In certain markets, physical infra is still a little challenged.
Yep.
Like Bangalore,
still?
As in, it's a phenomenal city. And it's one of the best cities for entrepreneurial talent.
Yeah.
But I would say the physical infra is still catching up because
the growth has been so fast.
The city is just grown exponentially.
Yeah.
Having said that, the digital infra in India is arguably amongst the best in the world today in terms of the frictionless identity and payments and stuff like that.
I don't even think it's close, to be fair. Yeah.
And to be honest, UPI in India and Pix in Brazil are probably far ahead of some developed markets as well, because they didn't have incumbency challenge.
Right. They didn't have to argue with someone to build it.
So you're absolutely right.
Right.
Whether
It's the same reason why there are high-speed trains in China and none in California. Sorry,
Correct.
go ahead.
Right. So huge differences.
Yeah.
I think what we keep ourselves grounded is in again having a lot more analytical approach to understanding impact in terms of quality, markets, and access we create. And there are lots of details within each of this. We have worked with some of the largest global institutions to create frameworks that then third parties vet out every year. And then it feeds back into our system to say where it's working and where it's not working. This is not perfect, but it forces us to be a lot more disciplined.
Well, and also to think about it constantly, right? Do you tell stories about this? In other words, do you create your own content as well?
Phenomenal question. I think we could do a better job. We do in certain cases, like with Global Impact Investing Network, with the World Bank and bunch of other institutions.
Right.
But I definitely think we need to do a better job, not to sort of promote ourselves, but more for people to understand that impactful models in today's world come in different ways.
Right.
And how this can be democratized a lot more.
Do you think sometimes about diversification? You're investing all over the world, right? And you're probably sitting in Bangalore most of the time, I'm presuming. But
I'm in Singapore. Yeah.
Singapore, excuse me, my mistake. But you're sitting in Singapore. And you can kind of get caught up with what's going on in Singapore. Very diverse, very dynamic financial services market, investment market. But to do what you do really well, you have to travel all over the globe. How do you look at diversification? Again, the things you're solving, the foundational problems you're solving, again, in Brazil aren't the same as they are in Vietnam. So how do you balance all that stuff out?
Great question. You're absolutely right. We run a global local strategy, and it helps because number of us obviously have grown up in these markets, you have married in these markets, have kids and all of that. So it's a small team of 35 people, but across 10 countries.
Yeah.
And we make sure that we have teams in the nerve centers of each of these markets, like, Brazil, Mexico, Singapore, Bangalore, Nigeria, Dubai. So we have teams in the nerve centers, and of course we have teams in centralized locations, and we have a local global model. But more importantly, we have built decades of relationships in these markets, right? Like 21 years ago, I fundraised with most people who today are MDs of the most well-known global firms in these markets. And they were analysts back then evaluating my company. So we built relationships organically. We've done investments together. We have hired people together. We have gone through tough times together. So we have built those local relationships, because one thing in these markets is you are as good as being able to reference people very quickly.
Yeah.
Without that, you can spend all your time 2 months and then you realize that you were barking up the wrong tree.
So you mentioned earlier that you came from a middle class or a lower middle class family, that you kind of had to, what's the right word? To fight for like the things that you wanted, to build it on your own. Do you think that gives you like a special insight into founders that are going to succeed? Because I like to say that there's a fallacy of now. When you meet somebody, you dress nicely, you have a nice watch, you know what I mean? All this kind of stuff. But it's not the you that you were in the past. But you know that internally, but nobody else who sees you does. So there's this little bit of mismatched perception between where you came from and where you are. But does that feed into the way you evaluate founders as well?
Yeah, it's a phenomenal question. Most cases where we have been able to have a great relationship with companies is where you relate with founders at a very human level. And one of my yardsticks for that is when things go south or something goes really bad, are you the first or the second call from the founder?
Right.
Because they want to have a thought partner and they're not worried that you'll judge them.
Right.
Then you have a relationship.
Yeah.
And that's kind of what we aim for. So you're absolutely right. The upbringing has given, I would like to think, a lot more flexibility and adaptability. Because you usually don't get what you want, or I didn't get what I wanted.
Right.
And two, having been a founder, when you are few weeks away from running out of payroll money, right? Or that fundraise is taking forever, that experience is very hard to simulate if someone has not been through that. So the combination of that hopefully gives us enough empathy to understand founders well.
Let's talk about a really high level thing. If I asked you what were three, because you've been doing this for a while, you look at this stuff all over the world in emerging markets, what are three recent trends in fintech investing in emerging markets that we should know about? What's going on?
Yeah, that's one of those questions where I say how much time we have. But
as much as you need.
Three trends. One is financial infrastructure. I think we are in a very unique place in the world where emerging markets are rewriting financial infrastructure like never before. For example, UPI and PIX are the biggest innovation in payments after MasterCard and Visa, which was 60 years back or so. That's one. Second, I would say is cross-border solutions. We are starting to see a lot more interoperability as open data, open commerce, and open finance models are picking up. A lot more interoperability. Like in Singapore, you can pay with UPI now.
I was going to ask you that.
So on and so forth.
Right, and there's
in Thailand with
PromptPay,
Pay Now and PromptPay, you can pay. UPI and PromptPay are apparently getting interconnected.
Right. This has changed my life in a way that I can't explain.
It is going to be phenomenal, and you'll see models being built on top of this. So that's I would say number two. Number three, I think, is how not crypto necessarily, but how the whole world of tokenization and digital currency is going to get integrated into mainstream. That's going to change the world. I don't think it's crypto versus the incumbent world.
It never is.
I think it's going to get seamlessly integrated in ways that we don't even understand today.
I completely agree. Look, every time a new technology, and I've been around long enough to see this enough times, every time a new technology comes around that's going to obliterate the previous technology, in this case, money, it never happens. What happens is they end up combining to form something that nobody anticipated.
Absolutely.
And this happens in all walks of technological life. Where do you think insurtechs and fit into Quona's vision?
Yeah, insurtech is something very close to our heart. One, because we have partners with some of the largest insurance companies in the world. And two, from our customer or ideal customer profile of Quona from an impact perspective, a lot of these folks are, one step away or one big incident away from actually becoming falling down the social and economic strata, and insurance really is what stands between them and that collapse of their economic or social life.
Right.
Sadly, in number of the countries, still the insurance penetration, frankly, compared to lending, payments, banking, insurance penetration is the lowest. Is the lowest in most of the markets we operate in. It's also a lot of behavioral change, but I think it fundamentally is what stands between, like I said, have and have not.
So protection is important. And you mentioned earlier this idea of this slow but sure GDP growth. And what I've seen over time, because I have one of the largest insurtech podcasts in the world, is that as people acquire even small assets, right? Microfinance does this. I can now afford to buy shoes, or I can afford to buy something for my kid. Now I think, what if something happens to it? How can I protect it? And that's where insurance and insurtech come in.
Absolutely. And the one thing I would say about insurance, that we are glad to see now, is regulations are stepping in a bigger way. And starting to make insurance mandatory, at least in certain cases where it should have been mandatory for a long time. That's certainly starting to help drive behavior.
Sure.
And also help it penetrate and get democratized.
Sure. You talked about UPI. PIX, I think, is what it is in Brazil.
Yes.
We talked about PromptPay. We talked about Pay Now in Singapore. But emerging markets often, because it's greenfield, right, have the ability to kind of leapfrog more mature markets. Have you seen a business model, right, that a business model for technology in emerging markets that hasn't yet been developed in Western markets or more developed markets that you think will actually make it there?
Again, great question. In fact, we are seeing a host of them now, especially because, think about it this way. What's fundamentally happening in the world is where there is less incumbency, but there is enough talent and innovation orientation and technology digitization orientation. Fundamentally, two things are being rewritten: digital infrastructure and financial infrastructure.
Right.
Now, as these two get combined, as they mature, and this rewriting sort of has an amalgamation, you will see bunch of the existing models being rewritten. And that journey started in a big way in number of emerging markets: India, Brazil, Mexico, Singapore being a hub for what we are seeing across Southeast Asia. These are just starting sort of nodes of that change. But that's the scale of this change which is happening. Most of the models coming out are new. Like credit on UPI.
Yeah.
It's unheard of, but it's going to become the future of credit and credit cards in India, for example.
I think you and I could have at least an hour-long conversation on just the impact across multiple sectors and multiple locations in India on UPI. We will save that for another time. Hopefully you've enjoyed this. Ganesh Rengaswamy, the managing partner of Quona Capital. I cannot thank you enough for your time
Thank you very much, Michael. This was fantastic. Great questions.
Thank you.
Thanks for having me.